This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview.
Marula Mining has outlined a two-phase development plan for the Kinusi Copper Mine in Tanzania, aiming to start copper cathode production in 2025. Well, joining us today is CEO Jason Brewer. Jason, thank you for your time. How are you?
I'm very well, Mark. Very well. Good to talk again.
Yes, indeed. Of course, I think we spoke only a few days ago. We've also got a podcast coming out, Market Musings podcast by Stockbox, coming out in a couple of days' time, really talking about you and your journey through always being in mining. But today we really want to talk about the plan at Kinusi here. So very comprehensive R&S there, the two phases there. The first one involving creating a gravity concentrate, coarse jigging and fines dewatering circuit, targeting 24,000 tonnes per annum of high-grade copper concentrate. So this has been worked on for a while then, Jason, and now you have your comprehensive plan all spelled out, ready to go to the market, ready to execute.
Very much. It's followed a lot of work which took place late last year and through the first several months of this year. Has involved a number of consultants, both mining engineering, processing, and geological, that have gone up and really given us a lot of belief in what we've got there at Kinusi. I mean, we felt it was a great opportunity. We've brought in some of the top consultants, mineral consultants out of South Africa that did a lot of this work as part of our listing on the Nairobi Stock Exchange and a competent persons report. We've brought in process engineers out of the DRC and out of Zambia, out of the copper belt, which is probably one of the most world-established copper producing and processing regions. So, we've now basically the board has taken on board the reports, and there were multiple reports, and agreed to the recommendations that have been put forward, and that involves that two-phase processing route, as you said.
Good. And you've got a cost in there as well, so 27.4 million South African rand, funded, of course, through AUO. So is that ready? I mean, is that part of the money that's been drawn down? Money's to be drawn down. When can you effectively draw it down and start work?
We have now, I've got Stuart Maremi, one of the Takeda directors. He's actually up on site at the moment. He arrived there earlier this week with some new mining equipment to actually start stockpiling the open pit mining. Part of that process as well, he's taking a series of bulk samples which are being transported back down to South Africa for some final test work to basically optimize that initial processing phase, the gravity circuit, the screens, the jigs, and the fines dewatering. So there's some additional test work which is going to be completed over the coming weeks. And with that, then we finalize that design. We've received quotes, I believe, from 4 companies. So quite detailed quotes, some of which includes the full installation and commissioning. The installation has been scheduled over a 31.5-day period and 19 days for commissioning. So the level of detail that they've gone into on this plant design, very significant. And now it's to be optimized with this work, this additional test work here, the hardness, making sure we've got that full test work to justify that production there of 24,000 tonnes per annum throughput.
And this comes from the sampling that you've done or doing at the moment, just some final sample testing to go on. So how long will that take?
No, look, we've started mining with the new equipment up there. Stuart Maremi is going to be doing a bulk sample out of Kinusi Pit 4, which is where the initial focus is. So within the next 5 to 7 days, that'll be transported down to South Africa with all the necessary permits in place. Testing over the course of October results in optimization, and then we can push ahead with the final design. And when I say final design, the design's there. It's a very simple process, but it's the optimization of that based upon some of the final test work from these samples.
So final design, October, November?
End of October, I'd say, Mark.
Right, end of October. Okay.
You're going to kill me with shareholders with me putting a firm date on it like that.
Yeah, I know. I do apologise for that, but shareholders.
No, it will be done in October. It's very, when you talk about this sampling material straight out of the pit there. It's not as if we've got to drill down 200 meters to get this sample material. The material, that mineralization, is at surface. So it's just got to make sure that it's truly representative, and Stuart knows what he's got to do up there. That'll be transported very quickly out of Dar down to Joburg for testing.
Okay, good. Okay, so that's a good date we can bear in mind. And then you said a 31-day installation. So once you've got the final design, I mean, when would you be wanting to start the installation? Would it be this year, or do you think it would move into early next year?
Late this coming quarter, early 2025, 1Q 2025. We're running into the Christmas period, which is a notoriously bad period to try and get any work done, let alone in London. Imagine down in Joburg where they have a holiday every first or second week. So we're hoping that plant will be commissioned, will be operating in the first quarter of 2025, and obviously those first exports going down there. We're actually in London next week, meeting with a number of commodity traders as part of the London Metal Exchange Week.
Okay.
So myself, Richard Lloyd, and one of our independent directors from here, Hanno Wangombi, we're in London, a series of meetings with various traders just to finalise that now.
Right. Okay, good. And I know you, of course, talked about phase 2. That's talking about getting to just over 10,000 tonnes per annum of copper cathode. So that will, of course, come later, but you're already sort of thinking about that. I mean, that when we're talking here, that's coming quite a lot later, H2 next year?
Yeah, we should be producing in the second half of next year.
Okay.
The production capacity there of 10,200 tonnes, which is roughly between 800 and 1,000 tonne a month. That's actually the limit on that. The threshold there has been set by the existing power arrangements that are on site. So, we're not planning on, having to put in place a new power station, solar station, bring in diesel gensets. We've actually got on-site power. So from this initial phase of just 10,000 tonnes per annum of copper cathode, that's almost $100 million of revenue. So it's nothing to be sneezed at. But we've set that threshold because we didn't want to have to go through that whole upgrade work on power supply and so on. We wanted to be able to move very quickly. So that's been the determinant in terms of what is our upper limit on production of cathode. Everything else is readily available, the acid, the various reagents, consumables. So, we're all set, ready to go in that second half of next year.
Good. Okay. And then just in terms of sort of funding and the costs for this, I mean, have you thought about any plans, thinking of both phases here, when it comes to things like unforeseen expenses or delays, etc.?
Yeah, look, we're very fortunate that as we embark upon this development of Kinusi, we should have 3 operations producing cash flow. So as a group, we've got that abundance of call it working capital, positive cash flow. Here in Kenya, the ability to fund activities in Tanzania using the cash flow coming out of the manganese. We've got £6 million available to us under the existing facilities with AUO. Okay, so that's 6 million of undrawn and available funding through that path there. So, for the initial phase of this development at Kinusi, the first phase of that development plan, that's more than sufficient. As you've seen, it's a couple of $1 million for capital and working capital to get Kinusi up and going. We're already, like I said, we're starting the mining, the open pit mining there now, and we'll be stockpiling that material there for the next 2-3 months. So you're going to have quite a significant portion of material ready to be fed through that plant. Okay. So funding's always on my mind, given my background as an ex-investment banker. And also for Marula's strategy, where we've always had in our mind that mantra of, doing things in a certain way that you don't have to kind of pander to the market, put out announcements on something to get you to the next phase, to get your share price up to raise capital. I do follow the share price every day, but most CEOs or MDs, they follow the share price every day because they know at some point they've got to raise capital. Okay. I'm fairly comfortable that in the long term, medium to long term, based upon the cash flows which we're generating, we're going to be in a good position. So the day-to-day share price movements, while I feel the frustration of shareholders, it's not a key driving factor in terms of me as I look at our funding, because we're not going that equity route. We've already secured our funding.
Yeah. Okay. Excellent. No, it's good to hear. I noticed as well. You put out a tweet this morning on this news saying it was a tremendous opportunity, and there was a reply by Smashing Blouses on, sort of asking, based on what? How much drilling have you done? Do you have a JORC resource here? So, I mean, are you planning to do that? You talked there a minute ago about not pandering to the market, going through the typical sort of stage gates that people would go through to get to the next level. I mean, do you have a response to that? You're just going to sort of crack on and do it?
We've said that the second phase of our exploration programs at Kinusi is the implementation and completion of a resource drilling program. We've got the drill holes locations identified. We've got some of the drill pads already prepared. And I think we've said in today's announcement that this is going to be in parallel with that. You've got to recognize that up in this region here, there's over a dozen small copper mining operations there that haven't just been going for several months. They've been going for years. This has been the livelihood of many small-scale mining groups up in that region. So when you go there and you see these projects and these opportunities and it's at surface, yes, you want to know just how big it is, because that determines how much financing you're putting in, how much you're investing in it in the long run. For this initial phase, again, we've already had geofields that have come out and said, look, there's an exploration target of 10 to 15 million tons, which has the potential with the resource drilling to be increased to a resource of about 50 million tons. You've got small-scale miners there that are throwing away material below 6%. And they're basically using material 6 up to 15% to upgrade to over 25%. So it's a proven area. It now needs to be looked at from a scalability point of view. And that's what we're going to be doing. And this initial phase for us really allows us to get into that. But no, we're going to be drilling. There's no shortcuts. We just move fast. It's done in parallel. Okay, that's the key thing. It's done in parallel, and it's all risk assessed. This program to get into production, $1.5 to $2 million in its totality. Okay. Your payback of that $1.5 to $2 million is within a quarter. Okay, so you kind of look at it from that perspective and says, does this make sense? Yes, it does. When you can see there's something like 26 small pits on the Kinusi licenses there. So you've got a good idea of what's there already. We've had MSA. We've had this main report here has come from a guy called Darren McGaw. He worked in the DRC. He's currently doing the heap leach operation. He's doing some work there for Moxico, which is the private UK company that have started one of the newest copper producers in Zambia. He's worked in some of the best copper mining areas in the world. He's come up here and he's seen this and he's been blown away. We've got Jana Van Wyck, who works for us down in Blesberg, who previously worked at Copper 360, who are producing copper in the Northern Cape. She's come up here. She loves this. She hasn't seen anything like it. Okay. She wants to come up here on a secondment with us out of the Blesberg operation and come and get more involved with Kinusi. It's a great opportunity. So for people that are saying you should be doing the drilling, you should be doing the met test work, we are doing it. But we're doing it in parallel with the other work, which is risk assessed, and from our point of view, provides a very good return for what we're putting on the table.
Okay. Well, it's good to hear you've thought about the long-term vision here. So really getting into production and doing drilling resource and that kind of thing, thinking about scalability in parallel as getting into production here and getting copper going to market. In terms of how you plan to position yourself as in the global copper market, are we talking to off-takers? You've got a route to market yet sorted?
Yeah, look, we've been talking with various groups on Kinusi for the past several months. And that's almost culminated now with London Metal Exchange Week, which starts on the 30th. So very timely for me to be in London. Very timely having Hannah over there as well, who one of the first Kenyan women on the board of a London mining company. She is in London with me. And I've got Richard Lloyd, our chairman, obviously based there. So we've got a series of meetings, Monday, Tuesday, Wednesday in London as part of London Metal Exchange Week. I had one which was arranged last night when we had a conference call. So, yeah, we're anticipating that over the course of next week, we'll firm up a lot of that stuff. And, yeah, it's very timely that we make this commitment to the project and then we close it at the back end with that route to market.
Okay, good. And what is London Metals Exchange Week? What's it all about? Making deals, is it?
It's a lot of talk about the commodities, about supply demand. It's mostly the traders. It's your big commodity trading houses. It's a number of companies such as us that are there, that are speaking to their trading partners.
Okay.
And the LME puts on a very good function, or series of functions, series of presentations, talking about the base metals markets, clearly the market fundamentals, and obviously copper being probably the most significant of those base metals. Takes center stage. So a lot of those Swiss-based trading groups, we're meeting with them, some out of the US. It's going to be a busy week for us. In addition to that, I'm doing a Marula presentation on the Wednesday evening with the Aquis Stock Exchange. So it's going to be quite a busy week next week for us.
Good. Okay. Well, thank you very much for your time, Jason Brewer, the CEO of Marula Mining.
Thanks, Mark. Always good.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.